Welcome into the Prospero.ai stock market live streams, everyone. How are you guys doing today? We got off to a rough start in the markets this morning when CPI came out, which we will be sure to talk about today on stream in detail. But we've seen the markets fight back throughout the day. The QQQ is now green, and we are red in the other three major indexes, SPY, Dow, and Russell. Let's take a live look at the QQQ and SPY net options sentiment in Prospero. We saw the QQQ being around 0 earlier this week, and it is still there right now. So it's been hanging near the bottom of the barrel for the last couple of days. Not a great sign. And we see the SPY at 10. So both are low. Forecasting maybe some bearish events coming up, but we'll have to stay tuned, and we'll talk about a lot of the news stories, stock move specific stories that are moving the markets today. As you guys roll on in here, be sure to like the video if you enjoy these streams. We're going to be getting into some great stories. I see a comment from Mario. Did Prospero write a newsletter about institutional risk appetite, normal style, and content? I think it's because of some of the stuff we're seeing in our signals and the craziness and uncertainty that's going on. So we'll get into that, Mario, in a moment. Hello, George. Welcome to the
Yeah, why wouldn't we write it, Mario?
Yeah, our signals kind of, I feel like, do follow the options markets and institutions. So it seems to make sense, but we'll see if Mario answers. Let me talk about some of the stories that we're going to be getting into today. So like I mentioned, the CPI that came out this morning. Then we have a story about Elon Musk making an offer for OpenAI, and then Sam Altman's response. We're going to be getting into SMCI's earnings and their stock going forward from here after they've had a tumultuous last couple months. Mario Mech says, didn't know if it was from one of the imposters. I think I've seen on Discord you've been getting a lot of impersonators, right?
Yeah, but the impersonators don't get access to the newsletter.
Mm-hmm. Yeah, the newsletters are tried and true, always Prospero. We're also going to be getting into CVS, which just had earnings and the stock is up bigly. The Mag 7 is being referred to as the Lag 7 nowadays, as 5 out of the 7 companies are off to a slow start this year. Warren Buffett keeps buying Occidental Petroleum. What does he see in it that makes him go further and further? He now owns over a quarter of this company. And last but not least, before we get into the model portfolio update at the end of the stream today, we'll talk about Apple teaming up with Alibaba. Baba, which shares have struggled for a long time, is now rising. So it looks like maybe a win-win for both of those companies. But first, let's start today with the CPI report that sent the markets all lower across the board this morning. We just looked at the net option sentiments for SPY and QQQ and Prospero. Both are still low. Are you surprised to see the market bounce today with that bad news we got this morning with a hot inflation read?
Yeah, it's going to be really tough to figure out what I want to do at market close today. Because last time it was at 0 and the market performed surprisingly well. I don't think I was as aggressive as shorting as I wanted to be. But yeah, it's hard. It's a hard market to read right now. And that stat that we shared kind of makes it even harder. There's actually even an update to that, Mario. Someone on X, and we can maybe post the link, you could probably find, well, I'll find it, had kind of challenged me and saying it was typical. And so it actually had me go back to other years. And when I looked at the same range that the sheet looks at from 124.24 to 25.24, 99.67. So basically only one of our large caps that had options on 124.24 long-term options over 320 days also had options on 2/5/24. So this being like a seasonal thing or, what have you, like kind of blows up when you're talking about the difference between, like a fraction of a percent versus 11%. That's a really, really big difference. And I already knew it was weird. I didn't need to look at the additional data. Sometimes you have to, though.
So there might be a few people watching who are kind of lost right now. I think to fill them in, it might be helpful where you looked at the options chains of the large caps, and a year plus out, there was way less than in the past, which is what you were just kind of explaining right there.
Yeah, I'll share a link, and if anyone wants to go and ask me any questions, I actually expanded the link. So what it actually has is, these numbers for the original, these basically these 55 stocks that I identified as drop-off stocks, and then there's another tab. There's another tab that also goes into like the large caps the year before on those dates to see like where I got those other numbers. But yeah, it's crazy.
So going back into the market action that we're seeing today, how can you explain the market going back and almost, I mean, the QQQ is green and other ones are fighting back to the even line. I would think that inflation reading was like legitimately a shift in maybe the, inflation lowering, Fed rate cutting cycle, like whole narrative. So how can you explain the market fighting back today? What is it focusing on?
I mean, I think what we're seeing is, kind of the stuff that we talk about with Trump. While the market did, the inflation reading was, not great, and the market did initially react, we also had Trump saying last night that he wants us to cut rates, right? Which is a little weird, right? Because he actually did say the rate cuts should go hand in hand with the tariffs. And that's not really a good way to approach macroeconomics, right? Because tariffs are inflationary, right? And cutting rates, especially in environments of inflation, can be on its own inflationary. Both of those things can be very inflationary on their own. So the idea that they should go hand in hand is kind of terrifying to where we can be in inflation. But I think what also might be giving the market more comfort is that inflation is just maybe not going to be cared about that much. And it may or may be, because just so people know, like a lot of these things are theoretical until they happen, right? Like we talked about, a lot of the like 51% of the last inflationary cycle was corporate profits. A lot of it was supply chain due to corporate profits, which is way more than normal, which is about 10% of a normal inflationary cycle. A lot of it was also supply chain issues and, making things more expensive because they were taking longer and, COVID and, things like that, that ended up inflating things. So these things aren't really ever a sure thing. So I think basically what we might see is the market actually thinking that because of what Trump said, that we might end up getting cuts regardless of what's going on in inflation. And there might be a lot done to make sure that the stock market does well, which is like the overall thesis that we entered this year. So seeing it play out is, something to watch for. Also, one of the Matt who helps me write the letter, he's been sending me a bunch of things about how this week, more people are, what did he say? More people are saying, what was it that I saw? The fastest pace since early November, hedge funds have been buying stocks. But what I said is like, okay, that, while that might be true, QQQ net option sentiment could also be going up when people are buying stocks because they could be buying stocks, but also want to protect their downside, with QQQ options, especially if they're buying risky tech stuff that they're worried about, DeepSeek or whatever with. So that all being said, I think, it continues to be a tough market to read. Like, we're doing a pretty good job just by actually just staying pretty active and being willing to reevaluate, everything on kind of a daily basis. It's not the easiest thing to follow, but it is kind of the best thing to do right now that we see.
I feel like one of the only things that probably saved businesses and the stock market during the last inflation cycle that we had was the COVID stimulus that everybody got that allowed them to have money to spend on the high inflation. If we got another bout of high inflation, do you think consumers would be able to, withstand that and have the spending power still able to buy when prices are going up?
I mean, that's what kind of makes it even more inflationary, right? If prices are going up, but especially a stock market fueled, profit or asset increase is allowing people to, continue to do that, that can ultimately become a problem, right? Because, that's going to continue to drive up prices. If prices don't actually act as a limiting factor to spending, then there's a reason to keep raising prices. And also, if more money is being basically poured into the economy because the stock market is profiting, which is what happens frequently, that's okay. But the problem is that when that happens, if the stock market doesn't keep going up or it actually hits a bear market, then you're dealing with a very difficult situation, right? Where you could get stagflation, GDP, negative GDP, as well as positive inflation going up. And that's how you could get that, right? Because basically the stock market, is, suppressed quickly. There's less money circulating in the economy. Some people maybe were using it and leveraging, and then they have to take money out of the economy, right? And at the same time, prices could stay high or elevated and take a little while. Obviously rates could help this, but that takes a bit to actually take effect. But yeah, especially if companies are struggling because their stock price is going down, it can be more challenging to lower prices. But you can get into a standoff eventually if you want to make, if people are struggling and you want to make sales, you do have to lower it, and so there is a push pull. But I think I think it is kind of concerning overall to hear we're going to do a different story on tariffs, but to kind of hear overall, I would say that this administration thinks it's a good idea to cut rates and use aggressive tariffs that could also both things could cause inflation to move up and to kind of get out of control on an upwards move. And it's especially scary on a day when we find out that inflation is stickier than people expected.
Yeah, so like you were saying, there was a tariff headline today or a report from the White House that as soon as Thursday, reciprocal tariffs could be announced. And we've seen the tariff headlines move the markets already in the past couple of weeks. Seems like this would be another step in maybe the uncertainty or bearish direction if these were to be announced this week. Is that something that you think, we're obviously seeing the low net option sentiment readings in Prospero, that could be weighing on it?
Yeah. I mean, that was a real what WTF moment for me as well, especially when you told me that, because reciprocal tariffs actually don't sound like reciprocal tariffs. They sound like circular tariffs, right? Because if someone is putting tariffs on you because you put tariffs on them, right? And then you put tariffs on their tariffs, the logical move for them is to just keep going, right? And I think you know, unlike what we were just talking about, which is like cutting rates while having tariffs, that makes zero sense to me. I don't know why anyone would ever pursue multiple different inflationary prongs while we still don't really have inflation to the level that we really want it. That doesn't see that. I can't. If anybody has got an explanation for that one, I'd love to hear it. On the circular tariffs thing, that might be reciprocal tariffs. At the end of the day, if you're confident that you can win the game of chicken, right? And we can see how that plays out. It's worked a little bit. Although it's just like one of those things where, it's so hard to get the news today because you heard that like Canada is, stepping up their border thing. And that's why the tariffs were postponed. But then I also saw news about how that was all something they already committed to do under Biden. And it's just like, who even knows? It's exhausting to try to sort through all of the stuff. But that is all to say, like, who knows what actually happened in that negotiation, how much this leverage is actually working. But if at the end of the day, and for me, what it's really about, right? And I really think everybody should make their best effort, regardless of your political party, to look at macroeconomics in this way, right? There's going to be, for a policy like tariffs, right? There's going to be some pain in the immediate. There's just no, we've seen it with the markets. It's a concern, right? Any shock to the economy is a concern, right? But a lot of these things should be ultimately judged by how they impact the longer term. But I think it's very important to understand that there are things that are set in motion that, will keep impacting the economy for a while. And there are also things that every current administration can do to manage those situations. And I think too often I see economics talked about as like whatever's happening in the economy, it's either like, right now that the person's responsible if it's the person that you don't like or the party that you don't vote for. And whatever's happening right now tends to be, older policies when the person you do like is in office. And I think when you're looking at this stuff, like, I don't think either party, and I mean, it's just like economic facts, no single person policy, whatever. These are very complex, processes that a lot of people are always responsible for. So I think that it's important to remember that and to do your own digging, right? Don't just take what one person says. Like, be like, okay, like, I always quote that 51% corporate profits, inflationary thing in this cycle, because I think it's really interesting. And I did my research and it was published by, kind of like an objective third party that does economic research. And I think that, like, I really think people would be served well to do more of that and to really understand, what's going on in the economy and what the levers are, because, we need to make sure that we're pursuing, wise policies. And I think, both parties have issues with that. But if you can't make sense of an event and like what maybe the party that you vote for could have done better, or the candidate that you like, might have done better, as well as the other one, you're never really learning about economics. You're just kind of blaming who's ever convenient.
So one of the more popular videos on our YouTube channel, it's actually been coming up and a lot of people are viewing it when they search on YouTube recently, is called SMCI stock is the best AI company you've never heard of, and it's over a year old. And the fact, we obviously posted many SMCI videos, and the fact that that one is the one people are coming back to makes me think there's a lot of shareholders that are either believing or hoping that this stock will be able to get some momentum and be headed in the right direction again. Um, and we even got a question yesterday on it about like, is there any updated stance on SMCI from this? So I thought it'd be a good time to bring it up to you and ask how you're feeling about SMCI now.
Yeah, we jumped in just because yesterday, and we were like listening, to the earnings, and basically they did say that they had to, change their accounting, and I forgot what it was specifically, or like, but basically I think it was a year that they had to change they had to move their, based on revisions, move their forecast down 9 cents, right? EPS, sorry, not their forecast, their results, right? There was basically an accounting issue, how they stated it. And I bought when I found that and I started it turning around, or I got in, because this company is worth a lot more if there aren't accounting problems, right? And if they're already going through the process and can already say that that it's kind of that small of a difference, I always read that as what they did in the first place probably wasn't that bad, right? Because 9 cents a share isn't a lot. And B, like, it feels like they're getting to the other side of it if they're already probably agreeing with lawyers, the SEC, whoever, on exactly what their accounting issues were, etc. So I do think that that's why I got back in. And it's looking really good in the signals, right? Our signals have been really good with SMCI. Like, they understood them when it was going up, as it was going down a little before. They really soured, especially the upside. So they have a good handle. And then, yesterday it was looking really strong again. So, yeah, I mean, like, I'm trying to pull it up. Like, I think it had like 86 net option sentiment. It's at 84, but yesterday when I got in, it was at 86. And oh no, it was at 89. High social sentiment. The upside's all the way back to 70. The growth is at 78, right? It looks like a strong company. They do have, like, if you're risk averse, might not be for you, but they said they would release, I think, an amended annual report on February 25th. And the stock's going to fly if they release that. Some of that was the delayed filings. Like, it is trading very, very low for where it's at. So that's what I got in. I might hold until then. If it's going to face a dip, I might get out. But this is, like, especially because our signals have turned around on it, it's looking like an attractive stock again.
So you're referencing like how they're going to shift their EPS whatever by 9 cents. And I think if you're a shareholder that got burned by SMCI's drop, you might be wondering, like, can you even trust them now saying that or adjusting that? Is it real now just because they've changed it? I'm wondering, I believe they're in the S&P 500. They replaced Whirlpool. Like, is there checks and balances on companies that, you don't just have to take SMCI's word for it, and like the indexes kind of verify that these things are accurate and protect investors in these companies?
At the end of the day, right, you have to trust the management, right? Like, once any investigation's over, all of their things are updated, whatever, like, that means it's resolved. But until it's resolved, it really has to do with trusting the management, right? You have to trust, because, like, right now, this is the kind of thing that can get you sued and maybe in jail, right? Now they could be in a ton of shit still with, accountants and not knowing how to restate and all, and they could be pretending that everything's okay, right? So they can actually have the stock go up and maybe exit their own shares, right? That's the kind of thing that could put you in jail if you're a CEO. But, like, there's a lot of things in between that, ultimately what it comes down to is, do you trust them, right? Because you can really get screwed thinking you trust management and then you don't trust them. I have no reason not to trust them. And I also one of the nice things about the Prospero metrics is I didn't have to think about that too hard, because if option sentiment is back, if upside is back that high, it means that people that know management better than me trust them. So yeah, I think that that's the big thing. But just what I told you, it's a little risky until February 25th, right? If they announce that they're going to be late, there's a company that I followed that kept on saying they were going to release this thing, and people got excited and the stock would go up, and then they just pushed it back, right? If they push it back, that's going to be pretty bad. Which is why I'm going to be watching that option sentiment. But, this is the kind of risk profile that I like, especially past earnings. People are happy. Some people are raising their price targets. This is the kind of risk I like, because it's a big payoff. If they release on time, right? Could go up 30-40% in a day, right? If they push it back or whatever, we're probably talking about maybe only 10, maybe 20%. So when you can do that kind of analysis, right? And it might be that, 40-50% a day, and it just keeps going, right? Because it's just viewed more like, it was in the past, with everything behind it. But, it's hard, right? Because, not everybody wants that risk profile where it could also go down 20% in a day. But this, to me, especially with our metrics, signals looking good on it, it kind of has the markings of a stock that's climbing out of its problems.
And Ted is commenting on XYZ, formerly SQ. He's wondering if we can get it updated in Prospero. How easy is that for you guys to switch a ticker?
We are working on it. It's just been we're trying to get this new, we're trying to release a new product, and a lot of our efforts are going there. Hopefully and we do it over the weekend. Hopefully, they have a delisting yet. Oh, SMCI. I'm assuming you're talking about SMCI, not not XYZ. But yeah, in fairness, Google Finance, a much bigger organization than us, didn't even have it fixed until I think Monday, in terms of being able to pull quotes. So yeah, these kind of things are hard, but we'll do it. We'll do it soon.
So it sounds like it's not just clicking on a box and erasing SQ and typing XYZ. There's more. That's why it's
no, because there's a number of data sources, and the hard thing is when you start switching the data sources, you realize that some of them still have it the old way. And then you have to develop workarounds for the ones for the, what you have, what you don't. It's not that straightforward, especially with all of the different data that we use.
Sharing that backstory to it, I think, will help Ted understand, because I feel like him and I could just be well, you just have to switch the letters. But so that hearing that makes sense now. So hopefully that helps you, Ted.
What's the delisting deadline for SMCI? We can keep going,
Thanks,
but I'll just put that out into the ether.
All right. So I want to bring up these. We have two stories about Elon Musk to talk about today. So an escalation in his feud with Sam Altman. So he and a group of people made a bid for OpenAI for $97.4 billion, which there is some uncertainty of whether that was a legitimate bid or if it was just verbal or whatnot. But Altman responded to him offering $9.74 billion for Twitter. And this is all on X. Altman was posting about it. And on that post, Elon Musk commented swindler. So I think if you had any doubt left that these two did not like each other, it is official. And then Another story that came out today is that Musk's SpaceX shares are now more valuable than his Tesla shares with the recent drop in Tesla. That before today, it was looking pretty dire for the Tesla shares. I think they were down like over 30% from their peak. So, what's the latest your thought on Musk's and his business dealings?
Oh man, there's so much. I mean, I alluded to this Monday, and I'm just like, Tesla is not doing well. And I'm wondering if he just doesn't, he's got all this other power now and he just doesn't really care about it. So I think that's the first thing that I'm just like, I'm wondering how much he even cares about like his companies anymore when he's got this big like government situation. I mean, I'm sure, but he used to like eat, sleep, and breathe these companies. And like at the very least, he seems very busy, right? You only have so much time in the day. And he's got different ones to run. I mean, the history of him in OpenAI, like he clearly wanted to be in more control of it. And I think he kind of viewed that. I think, he's on record as kind of saying that Google had the best AI, and then, OpenAI is the only thing to compete with it if they do it right. So, I mean, I think he's probably feeling a little behind in the AI race. He's got XAI, but OpenAI has a lot of velocity. And you know how he feels about Google. He really respects them, and it's hard. It's hard to like you can start poaching people from OpenAI and start building similar tech or whatever. I'm sure people are going to try to do that with DeepSeek. But at the same time, it's like it's hard to catch up, especially when you don't know what's going on, what the release schedule is, what they might have. Like especially with AI, like there's always a question of like they might have something that's a lot more powerful that they're just not ready to release into the world yet. And I think increasingly we have to assume that kind of thing is going on based on how powerful it's going to get. But I don't know about the requirements, like certain operating agreements, or maybe Microsoft's investment thing. They'll actually require you to take bids seriously, and like in taking a deal seriously, that's a legitimate offer. Obviously, there's an amount of diligence that could get done. So this might just be an attempt for Musk to do some fishing, like put in a bid, figure out like what's going on at OpenAI a little more. But I don't think it's a serious offer because of what you alluded to or didn't allude to, talked about. Sam Altman and him, there's clearly some bad blood. I imagine like from some of the stuff that's exchanged on the internet and things like that, there's probably been like an extended personal disagreement and dislike between them. And yeah, it's like at the end of the day, you as a CEO, like Sam Altman's got a lot of control over that kind of thing. And like I said, I don't know what's in his agreement or his operating agreement or whatever. But I imagine there's some discretion in terms of, even if the offer is really good, what to do. And I'm not sure how good of an offer it is because I think they've been valued at higher than that. So it's one of those things like you don't even know like how much it's theater. Maybe he wanted to dig into their books a little bit. Or maybe he just wanted to let people know that he thought they shouldn't be valued as high as, some other bidders put them just to fuck with them. You never know. But these are the things I do at least think I know about it. I don't think, and this is kind of from his prior comments, not as from this, I don't think Musk is completely happy with his position in AI versus where some others are at. And I think this might be, whether it's a game to find out about it, what's inside and diligence, whether it's a game to try to lower their valuation so it's harder to access capital. A lot of what I suggested kind of fits in, I think, that overarching thing that I don't think he's happy with his position around their pure AI technology relative to others. I'm sure relative to a lot, they're doing a lot better, but relative to others. And I think the other thing that is pretty clear from this is that Sam Altman is not too fond of Elon Musk either. I don't think they're fond of each other. Those are the only things that I'm fairly sure about in this situation.
I mean, I do want to move on because we got a few topics left. But just like, could you imagine if Elon actually did own OpenAI? Like, just the control and just the amount of wealth that he's been able to. I mean, it's just insane. Tesla, OpenAI, SpaceX, Neuralink, Boring Company. Like, where does it end? It's just crazy. If it ever actually did happen. Okay. So moving on, we have CVS shares up as much as 16% today. Slow death happening there. I think we're going to get into in that business. But what was staggering to me when I looked at this stock today, preparing for this, was that they did $97 billion in quarterly revenue, and their entire market cap as a company is $80 billion. So they're trading at less than a quarter of their yearly annual revenue if you annualize that. And just to compare that with like some of the growth companies, the exciting companies that investors invest in, even if you think of Palantir, like how this company, and like why would any entrepreneur or business person want to get involved in this retail space? Like, I don't know, seeing that. But what are your thoughts on that, CVS and everything there?
I mean, I think what it tells you pretty definitively is that the market doesn't really have a lot of faith in CVS's business, right? And I think what it really comes down to is how many, like, I think this would be hard, but it's like, what percentage of CVS's business is from people walking in to get prescriptions and getting other things, right? I'm sure it's a lot. Or maybe it's just like you get your prescriptions in there and you're in the habit of getting like little things, from your house. But I think with like Amazon potentially getting into medicine and other things and just like it being easier to deliver, prescription medicine. And then, deliver anything that you used to get there. So it's just kind of hard, like, especially when you look at like the size of some of those retail locations, right? It's just like, I don't know how you can look at their business model and think that they will continue. Revenue is one thing. I don't really know about their profits, but I think their profits have been down. And like I go to CVS and I'm constantly getting sent like coupons, but it's kind of funny. And I'm sent a coupon for like, 40% off one thing, right? And the funny thing is like, I'll go and I'll look at that. And even like the 40% off at CVS, it's still cheaper on Amazon. So that just tells you the type of prices they're trying to charge to like make up for the fact that you're like buying it in person. But yeah, I think it's just like, I think there are things, and I think we're going to talk about one of them, but we've talked about like cable in the past, right? And you look at that, and I think that like the best thing cable has going for it is the people that already pay for cable, right? I think people would be more bullish on CVS if you were on like a monthly cycle for it and you still use it a little bit and it just like pulled and I think that would be better. That's why people like recurring revenue. A lot of investors like recurring revenue for that reason, right? People, if they're already paying for something, they're a lot more likely to continue than something where like they actively have to choose it every week, month, blah, blah, whatever. But yeah, I think that's what's really tough about this one because, maybe it's 3, 4, 5 years before the revenue really drops off or drops to the ground. And like some of that is like, okay, how soon can people really start to steal their prescription business? Right. But like the other side to it is, you never know. There's a lot of like, I don't know how much debt they're carrying, for example, but you never know also just when investors that are their debt holders have certain covenants, profitability covenants or whatever, where they're just like, I don't want to finance this business anymore. I want to shut it down. I want to I want you to give sell your assets, give me what you can, because otherwise you're just going to be burning through these. And that becomes an issue. So I think that that's really the hard part. It's hard to kind of look at these businesses and say does it have 5 more good years left? Does it have 2 more good years left? And so I think when people really doubt a long-term business, it's very easy to see why you would CVS. I think you have people starting to treat it like it might only have 1 good year left or 2 good years left, because they don't really have confidence to forecast it beyond that point.
And a similar sector in that mindset of investors has been oil in the energy space, but not to Warren Buffett, because he continues to buy Occidental Petroleum. He now owns 28.2% of the company. So, George, if you can get into the headspace of the Oracle of Omaha, what is he thinking diving into this company like that?
Well, unlike CVS, for an energy stock, Oxy looks pretty good. It has for a while. I think it's been at the top or whatever. So there you go. It's something. I think what he's thinking is, I kind of wanted to look. That's surprisingly high. Oxy's forward PE is, let me just see. Yeah. 14, basically. It's not, I would think it would be lower than that. Anyway, all the following things I think are true, right? I think that it's kind of implied. If he's going so much to cash and he's putting it in, it's kind of implied that that's one of the only, value investments that he sees. And I think part of what that's been coming to is even if you just contrast, throw out that it looks better in our signals, which is important to me. Even if you just contrast CVS and Oxy, right? And their businesses. Is anyone coming to save CVS in the government, right? I don't think so. I haven't heard anyone talk about I think Trump said drill baby drill or something like that. I haven't heard anything close to the equivalent of being oh, we're going to make sure people shop at CVS's. That's an extreme example, but it's to make the point that it's just there is also a real yes, both I would say they're both kind of ultimately dying businesses. But I would also say that, oil looked like it was going to be, dying a lot faster. Now there's a president that's pretty pro oil. So it might not be dying as fast as some might think. We still subsidize it. Both parties still subsidize it, right? Instead of, turning more to renewables like other countries have. So even the Democrats really care about oil. Not as much, but they keep those subsidies going. So yeah, I don't think oil is energy. I don't think it's as dead as it has been, right? It looked like it was really going to do that. And then the other thing is, I think we've kind of passed the point of no return on some of this climate change stuff. And I think as that happens, we might just have people just being fuck it. I already think we have plenty of people that are just saying that, hey, hell, maybe a few generations from now are not going to be able to live on this earth, but that's happening anyway. We might as well, have it as good as we can now.
The AI is going to take over by then anyway, so what's there to be worried about? But with that being said, you want to do the switch over, and we'll see you at the model portfolio update in the Prospero lab?
Yep.
All right, chat. Stick with me. We'll be back with George in a moment. We will do the model portfolio update. If you're new, that is when we do live changes, which is actually a paid-for product, but you get to see it for free on the stream. So there you go. We have had over 500 viewers in here today, so thank you all for stopping by. One topic that we did not get to today, so I'll just mention it to you right now, is that Apple teamed up with Alibaba to put AI in their China iPhone 17, and it was sending, I believe, Baba shares higher, and probably a win-win for both of those companies as Apple has been struggling with their Chinese business. I think it shrunk 11% year over year in their most recent earnings. So maybe they can correct that with this move. Taking a look at the markets now, we are red across the board. So a little bit of weakening in the last 45 minutes since we started this stream. Although the QQQ is just 0.01% red. So it's actually flat now with an update. So almost back to green, but slightly negative. Let's take a look and see if there's been, well, there can't be any more weakness in the QQQ net option sentiment, so it can only go up from where it's at, but let's see if it's either up or even from when we started. It was at 0 when we started the stream, and it's now been at or very close to 0 for a few days. I believe this entire week, yeah, since February 10th. So it is still at 0 now, so we're seeing that trend continue today. And then the SPY is at 10, so I don't think a change in either of them from when we started the stream today. If you enjoyed the topics that we covered, be sure to like the video on YouTube and Twitter or X. I see we have almost 20 people in here on YouTube and only 10 likes, so like the video if you enjoyed the content today. Hopefully we covered stocks that you wanted to be seen talked about. And if you want to see us look at any of the stocks when George is doing the model portfolio update, just comment the tickers right now and we'll take a peek and we'll get George's opinion on them. But now we are just waiting to start doing the model portfolio update. Let me post our, if you guys follow us across social media platforms, let me post our TikTok video for the end of the day. We post twice a day on Instagram, YouTube, TikTok for short videos. They all come from these live streams, so you're not missing anything if you watch these lives usually. But they're much more, they're like 30 seconds or less digestible content. So if you want to follow us across the board, please do that. And then also, I guess I'm just doing a bunch of shout outs today. In our YouTube description, there is a bunch of links. There's a link to our website. You can download the app if you haven't yet from there. And there's also a link to our Spotify, which we post these live streams. So if you don't catch them live or would just rather watch there, you can click on that and do that. But without further ado, so there was no movement in net option sentiment, still 0 for QQQ and 10 for SPY.
Okay, let's start sharing the screen. All right.
SPY net option sentiment has retreated near QQQ, but the market is doing better today. The tough to read market continues.
That's so odd. I think the market is up today, right? But all of these segments are down.
The only market that's up now is QQQ, and it's up 0.01 right now. So, very close. That is weird, though.
Yeah.
I think I've been seeing recently that the SPY and QQQ volume has been like really low. Do you think the market is just kind of waiting for like something to happen and then we'll see volatility or like volume come back?
Yeah, I don't know. Now energy's down. Energy was up. Now it's down.
Energy was the one sector doing well and now it is not. So nothing looks safe. Consumer discretionary flip 2. We will target our best signal picks. First looking too much cat/sector.
All right. Let's see what we're doing with here. What's going on with that ESE? At the top 2 days in a row. Spying. I've got plenty of this in this already. Got plenty of that. Whoa, what's going on here? Chef is doing well, apparently. cards. I had all those VSTs. I don't think I want 3. $37, $44. Oh. Damn, look at all. That is a lot of stuff I'm exiting. I already exited these. That is interesting. Okay, so that makes this even more. All right, we are going to have to grab I don't think we need all that healthcare. Okay, 10. That sounds good. Anything look compelling here? Just a little more exposure. But
I have a question. If you saw a momentum score, is there any number that, like, regardless of what's going on in the market, like if you saw a 99 overall momentum score, would you add that no matter what?
I've never seen above an 80. But like, yeah, if I saw above an 80, I would probably.
So above an 80
Above
and
an
what
80. I've seen a
about the
lot in the
reverse?
teens. Yeah. That I typically do add. Okay, it's 4. I'm just going to take one more look before I send this out and see if there's any other exits on the longs that might make sense. Maybe I'll take my profits on Chef. get this out. Okay.
All right, everybody. We will be back next week, but the market is closed on Monday, so we'll be back probably Tuesday. But read our Sunday newsletter to find out for sure when we'll be back live. But until then, have a great week, everyone. Thank you,
Thanks.
George.